Hi, Adam Houston here, coming to you from the digital studios of Market Club, and today we're looking at the euro. I'm sure you've heard about the euro getting beaten up and getting pushed down. Well, it's true. The market has come under a great deal of pressure, but that pressure didn't just start in the last week or two, although it's intensified. It's actually been going on since the beginning of the year. This is where the euro basically topped out and the dollar got strong. So the symbol is EUR-USD. That's the euro against the US dollar. When the market's going down like this, it means that the euro, this part of the equation, is weakening against its counterpart, which is the dollar. So that's the difference. So as you can see, at the beginning of the year, everyone was thinking the dollar was going to go down the tubes with all the inflation, all the incredible amounts of TARP and money being spent and thrown away. Well, what happened was just the opposite. Europe got hit. So this is basically the end of December right here. And you can see for the first several months we just continued down. Now, it looks as though we are going to keep going down, but the reality is some of the indicators, like right here, the MACD, is turned up, possibly giving a little divergence, possibly for a little bounce. I don't think it's going to be a big bounce, but I think we'll get a bounce from here. And I wouldn't trade it based on a bounce. So let's put our trade triangles in here. So we'll take everything off the screen. It's very simple to do with Market Club. And we'll put our first Market Club triangle in, and that's our monthly. And as you can see right here, which is right here, at 142.16, which is right here on this monthly triangle, you can see it right here, that's where we first had a major sell signal. And that goes with our perfect portfolio with an FXE. We've been basically bearish on this market since the beginning of the year, and you can see how attractive that is. Now, this is Forex. This is spot Forex. So what we're doing with spot Forex, we trade basically on the weekly triangles for trend and the daily for timing. Now, this is if you're a short-term trader. If you're a longer-term trader, you may want to take the monthly, weekly approach, which works very, very well. But if you're a shorter-term trader, you want to be looking at these two triangles. The weekly for trend and the daily for timing. As you can see, they're both down. The last one was 126.16. The market's currently trading at 123.69, and we're short. So let's put our daily triangles and our weekly triangles, and you get a better picture, and we'll scope it in a little closer. So let's take everything off the screen, and we'll scope this in. It's very easy to do with Market Club, and you can see, We're going to put our weeklies in, and then let me explain to you very quickly about the weeklies, because the reality is a red weekly means the trend is down. A green weekly means the trend is up. But in between these 2 points, you're going to be trading on the daily triangles. Okay, so if the red is down, you're just going to be taking signals to go short the market, as opposed to if you have a green triangle, you want to go long. You wouldn't want to do that. If the trend is down, with the red triangle here, you basically will only take signals that are red, like here at 126.16. So this is all with our trade triangle technology. It's very easy to use. So let's take everything off the screen for a second, and let's put our daily triangles in. And as you can see here, this is when at 132.82, that's when our last weekly signal kicked in. As you can see, it caught most of the move. We have a signal here at 133.40 to come out, but then to get in the next day at 132.09, get short, and that was covered at 129.66, and we got short again at 126.16, which is right here. Now, for some people, short-term trading is not the answer. You want to go on more of an intermediate-term trader. Now, if we were doing this on an intermediate basis, you would see, and I'll show you how that works. We'll take the dailies off, very simple to do, and we'll scope this out just a little bit. So you can see we know the monthly trend is down, and let me just show you where that started. So the monthly trend kicked in right around here at 142.16. Okay, so you would have got short there. You would have covered the position right around this level. You didn't go long. You just got out. You took a nice profit from here to here. That's a nice profit. And we're not doing this with hindsight. This is how we've been doing this for years, so it's not reinventing the wheel. Now, we would have got back in right here and got out here. This is probably a flat trade. Maybe you lost a little bit. You would have gotten back in here, though, and that's the key. You would have gotten back in at 132.82. The market's trading at 123.64. So you have 900 pips in the pocket right now. That's a really, really nice profit. So potential for this market to turn up or have a bounce, perhaps to the 126 level, is very real. Does it change the major trend? No. Does it change the intermediate trend? No. Does it change the daily trend? Probably. So anyway, the idea is with the euro is to trade the trend and trade the market. Now this market looks as though potentially it could go longer term 1 equals 1. Okay? That's 1 euro equals $1. So 1 euro equals $1. And I'll show you why I say that. This will all be predicated once again on triangles. If the market doesn't get there, that's a totally different situation. So looking at the market again, let's scope this out. And in fact, we'll go to a maximum view here. We go all the way back to 2002. I'll take all the triangles off because they're not important, right? But the fact of the matter is we went below a very, very important time window. I'm just going to put a close only. You get a clearer idea. This area that was back in here, this is the late October area in '08 and beginning of '09. And then we had to move up, and we've gone down. Now, we've actually gone below this level, just barely, but it is an indicator that we could see this market go further. Now, if you measure from here to here, and you simply flip that down, it takes you right down to around this 1 for 1. So we're looking for potentially longer term, 1 euro equals $1. So let's see how things work out. Adam Hewison from Market Club, thanks for stopping by, and remember to trade the triangles.